Wake up. Wake up. It's time to get in the zone. The Race Rat Podcast talks about everything and with anyone to help you grow your brand and business. Here's your host, Evan Shepard.
Hello, everyone, and I want to welcome you back to the Race Rat Podcast. And in this episode, we have an awesome guest. Today, I have Brandon Dawson. Brandon is an incredibly successful entrepreneur who built his own company, had a fantastic exit, and has now gone on to co-found Cardone Ventures and Audigy Group. So, Brandon, thank you for coming on today.
Sure. Thanks for having me.
Of course. So, Brandon, I want to know, because I feel like so many young entrepreneurs, they don't really know where to get started a lot of the time. And I want to know your process of going from basically starting your business to eventually exiting it and going on to building all the other ones that you have as well.
Sure. For me, it's the little lessons. The more you pay attention to the little lessons in life, the more opportunity you have to succeed as an entrepreneur. For me, I was 16 and I needed to mow and pick up the walnut orchard in the fall. And my parents, who normally helped me because we needed to generate $5,000 a year so my brothers and I could go to a private little Christian school because my parents didn't have any money. So it was my job to always mow the orchard. And then when the walnuts fell, we would, as a family, would pick the walnuts up and sell them and need to make $5,000 for our tuition. Well, this particular year, my parents were going out of town and I worked a night job as a bus boy, and then I had football practice during the day. So they couldn't take my car away. So what they did, they grounded me. They told me I had to pick up the walnut orchard the week they were gone. And so them knowing that I was going to be very busy between working as a bus boy in the evening, doing football practice in the daytime, and school, and then picking up the walnuts, it would consume all my access time. And so I went to school. They went out of town and I went to school on the Friday. They left on the Thursday. And I was really pissed because I had this new girl I was really hot about, and she was in college, and I knew she wasn't going to wait around for me. So I was like wanting to go see her, but then I knew I had to do the stupid walnuts. So when I saw a note on the locker, the senior class was doing a fund drive. They were trying to raise $1,000 for the senior trip. And so I thought, hey, I had an idea. How about if I tell them I'll help contribute to the senior trip if they come help pick up the walnuts? And so I presented it to the president of the senior class, and that Saturday morning, I was hoping maybe 3, 4, 5 people would show up and help me pick the walnut orchard, but I had more like 50 or 60 because they brought their family and their brothers and their sisters, and we just picked that thing clean in 3 days, beyond pristine, and I had them rake everything, clean everything up. I didn't touch any walnuts. I just weighed them and put the tags around them. And an interesting thing happened, and that is those parents, everyone was so happy to pick the walnuts up. And it dawned on me, they weren't happy because they were picking up walnuts. They were happy because they were helping their kids earn the money to go on their senior trip. And they wanted to support them, and the brothers and sisters wanted to support them. And so it really taught me a lot of lessons. Another lesson I learned is because I was a 2.4 GPA, I wasn't really good at math. When it came time to figure out how to sell the walnuts for enough money to pay the senior class, I just made up a number. And lo and behold, the parents that were there bought a majority of the walnuts. They were like, we want to buy them too. Now, what did that teach me about business? The first thing, it taught me the art of scaling. Having more people solve the problem will get it done bigger, better, faster. It taught me that price is only an issue in the absence of value. Like I just set a price because I wasn't smart enough to actually know how to calculate it. And instead of making $5,500 a year that my parents needed, I paid the senior class and made $8,500 because I had built-in buyers. They didn't bid me or shop me. The third thing is that sometimes the very thing that you're doing, in this case, the walnuts and selling the walnuts, isn't really the purpose behind why people do things. Sometimes the purpose is the benefit of the thing that they do. Whereas a lot of business owners talk about what they do, they really need to be talking about the impact and the benefit of what they do. So just early on, those lessons taught me that there's a bigger, better way to do it, that money is only an issue in the absence of value. And whatever it is you're doing, even if you hate it, it doesn't matter if it creates some residual impact that you should be promoting and talking about, because then you can take on things that other people don't like to do because they hate actually doing the work and turn it into a huge asset by having a residual benefit of the work that's done. So I had that carried with me, and I worked for a company, and I had one goal: to save enough money working for this business that I could quit my job at any point in time and have enough I could live on for a year. That was my first goal. By the age of 26, I had accomplished that. I started working when I was 19, dropped out of college and moved to Atlanta and became an outside sales rep. Lived as frugal as I could and saved as much money as I could. And by the age of 26, I had a newborn baby. I had a 2.5-year-old, and I had bought a pretty nice house, and I had saved enough money I had that year. So I went to my wife and I said, we're selling our house. We're packing up. We're moving from Minnesota to Washington, or to Portland, Oregon. And I'm going to start my own business. I wasn't certain what I was going to do, but I knew I didn't want to work for somebody else. And so then I had a year's worth of capital. So we bought a little tiny house in Oregon. Completely disrupted the way we were living, because I was 24, 25, 26, making $150,000 a year on commission. Was willing to walk away from all that. And I went around and met with dozens of business owners that had listed their businesses for sale, or that I knew they were thinking of selling them because of the network I was in. And I said, I don't have any money to buy your business, but if you give me a note to buy half your business in 36 months, I'll step in and run it, and I'll increase the value, and then you'll win twice. You'll have a buyer, and the other half of the business that you didn't have to build, you get the benefit of the increased price. I did that. It was a $3 million business, and I parlayed that into my first company that acquired 100 businesses that grew to 65 million, and that I took on the public on the American Stock Exchange by the age of 29. So I parlayed that one deal all the way in from 26 to 20. Think about this. 3 years later, I had a $60 million business that was public on the American Stock Exchange. And I never used any of my own money. I only used the money I saved to live on. And I had a year's worth of capital, so I had the courage to do that. Then I ran into some private equity. The private equity company wanted to sell in 2001. We were just getting ready to take off. They brought their own guy in to sell the business. I was bitter and pissed. I learned a lot of lessons about what not to do when you use other people's money and give up control. And so I sat back and I looked at what I did really well. I looked at what I didn't do well. And I had enough money to live a couple of years. I didn't make a lot of money on that, but boy, I had a lot of experience, because I bought 120 businesses. I did 4 capital raises with private equity groups, making hundreds and hundreds of presentations. I used to do healthcare presentations with big companies. I had to learn skills and develop things that I didn't even know I needed to know. And I had all that skill set, but I wanted the next business I go build, I wanted to do it without using anybody else's money. I didn't want anybody to have control over me. And I studied all the consolidation attempts that were happening in the late 90s, early 2000 to understand what went wrong. And I formulated my own model, my own strategy. Most of it was built around the psychology of consolidation. And I started my last company, Audigy, with the last $500,000 I had, creating my own equity model. Took me 8 exemptions from the SEC to get it approved. And I launched that with $500,000 in 2004. And within 18 months, I had paid myself back the $500,000. I never borrowed any money. I never raised any capital. Over 14 years, I generated $50 million of profits, of which I built the infrastructure. And then in 2016, I sold the business for 77 times EBITDA, $150 million. And I shared 38% of the economic value with all my customers and all my employees. So I distributed it out almost $45 million to them for helping me build it. And then I partnered with Cardone to bring this strategy to thousands of businesses across the country, of which now I'm helping hundreds, if not thousands, every week.
That's incredible. So the one thing that you mentioned throughout that stuck with me the most, at least, was when your plans got shifted, right? You were acquiring different companies and you had equity, and that one company, they decided to sell, and you said that you learned a lot of valuable lessons in that. What do you think was the most valuable lesson, or like, what would you wish you could have told yourself if you had the ability to like have some hindsight?
Well, there's a dozen different decisions that were made over like a 12 or 18 month period that culminated in me leaving the business, that had I made any of those decisions differently, I would have made between 30 and 100 million on that first deal. So my poor decision making cost me at least $100 million. And I don't have anybody to blame but myself, because I didn't know what I didn't know. And I made decisions in the moment that were inconsistent with moving me in the right direction. So the thing I would tell myself is what I tell every business owner today, which is surround yourself with people that have the experience, surround yourself with people who are willing to be open and honest with you as a mentor, and take really good guidance and advice from people that understand what you're dealing with, can articulate their willingness to understand it, and then get great guidance and advice on how to navigate it. Because had I had that in my life in those moments, which was my affirmation when I launched my new business, is that I would never make decisions or do things that are in my weaknesses without finding mentors to help me. And that's where I built my repertoire of all the mentors: John Maxwell, Jim Collins, Sharon Lechter, Story Musgrave, Michael Gerber, all these people that you read their books, but who became dear friends of mine, or people I worked in their businesses with, now Grant Cardone, because I wanted to take my weaknesses and turn them into strengths. And so the thing I would have told myself then is really do a finite assessment of your weaknesses. Despite how much success you're having, don't let your arrogance and ignorance sabotage your opportunities, and have an open mind, one of humility. Seek out people that understand what you're dealing with, are willing to work with you, and learn as much as you can, and then make decisions based on really good data. And I wish I would have told myself that then, because I would be worth an extra $100 million, and a lot of the bullshit I had to go through, I wouldn't have gone through it. My career would have, I believe everything happens in cycles, and I've moved my career up. I'm probably 3 cycles ahead of the average person. Most people haven't accomplished what I've accomplished until they're in their 50s or 60s. I accomplished them in my late 20s. But that first cycle that I went through I had so many opportunities to be worth an extra 50, 100 million. And it would have propelled me into some huge things that I opted not to do because I broke my own confidence. And then I had to restart over. So there was probably 8 years where I was in start over mode, rebuilding my confidence and learning new things, versus the trajectory I would have gone on. I would have gone to being worth 100 million and then $1 billion. Now I had to get back to 100 million, and now I'm going to $1 billion. So I lost a whole cycle in that process.
Absolutely. So obviously a lot of tough times after doing that, a lot of probably some regret, some things that you wish you'd done differently. You picked yourself back up. You started Audigy. Did you have to take obviously you had to take somewhat of a different approach to scaling Audigy than you did the other businesses. What do you think was the most important factor to you being able to scale it as you wish compared to the previous business?
Yeah. So I learned a lot. When you buy 100 and something of everything and you merge it, you get all those different cultures, you get all those different ways of people doing things from a process standpoint. So I created I went back and assessed what went wrong, and almost in all these consolidations, I actually hired a research firm to look at all the consolidation plays that failed. And the number one reason they failed is culture. When you take a human being and you start dictating to that human being what they need to do, there's always going to be natural resistance, even if there's a win in it for them. For example, if I go to you and I say, dude, you need to lose 20 pounds, and I got your regiment together, I'm going to show you exactly what to do. I'm going to badger the shit out of you until you do it. You may be like, oh, okay. But if you make the decision that I'm pushing you too hard, or I'm on you, or, hey, why are you eating that? And why are you drinking that? And you're like, dude, I'm so sick and tired of you micromanaging me. I don't give a shit. I'm happy being the way I am. So leave me the hell alone. Right. When you consolidate and you acquire and merge, you get a lot of that. Even if somebody might make more or win more, as soon as you start cramming down on them what they need to do, the natural tendency of the human mind is to resist it. So I realized that the number one obstacle to consolidation and creating value is the psychological aspect of oppressing people. So how can I invert that? And that's what I created was, instead of me buying you and cramming down on you, how about I give you a piece of my company? I'll go build these resources. You use them and your business will get huge, and you can do as much as you want or as little as you want. But it's all about you winning. And then if you win, I'll share and win with you. And I changed the psychology. And so that was the biggest lesson I learned, is about the human nature of people. I became an expert at understanding people. And then through that, my second biggest weakness was I was not a high process driven. I thought I could just hire people that would figure the process out. And that bit me in the ass, because the reason that my largest investor got control of the company is I was over reliant on my operating and finance team. They made some mistakes, and I had to do an emergency round of financing, which gave control to my equity partner. And then that same year, I launched a new program that within 36 months was doing $1.3 million a month of pure profit. And if left alone, that would have been $100 million. But the private equity group was like, hey, we're up to our 5 years. 2001 happened. We don't care. You're just a rounding error in our $2 billion investment fund that's now worth $12 billion. So we want to liquidate everything. And it wasn't personal. They didn't give a shit. I was just too small for them to care about it. And I got sucked into that vortex. And that was another thing I learned, is I will never allow anybody else to control my destiny.
Absolutely. So eventually you go from Audigy Group. What made you want to partner with Grant Cardone and, co-found Cardone Ventures? Like, what was the drive behind that?
Yeah. So I had hired FTI out of Chicago. It's $1 billion consulting firm. I spent, $500,000 with them, breaking down hundreds of different industries that I was going to go after to do what I did in the audiology, ENT, otology, allergy space. And then I refreshed that work in 2016 when I sold Audigy with IGS out of Boston, same group that a lot of the private equity groups do to do their research. And it set me into the company name was going to be called Choose Growth, and I was going to go to those verticals, and I was going to do what I did in audiology with Audigy, but it was a multi-vertical strategy. And then Natalie and I were like talking through strategy of what is the fastest way to go to market. And so I started meeting with all my buddies that own private equity companies. And they were like, hey, take over our distressed assets. And I was like, oh man, I don't want to start with people already all being pissed at each other, because I got to clean that up before I can move the business forward. So then we were like, okay, we don't really want to do that. We could just start our own company and go out to these verticals, but we don't have relationships with any of those people, nor do we have the experience. And then we started looking at the social media guys, so Tony Robbins, Gary Vee, and then she found Elena Cardone and told me I should be paying attention to Grant Cardone. So I went on and watched Grant, and I was like, I can't work with this guy. He's screaming all the time, and he's crazy. And she goes, no, you're seeing the persona Grant. You need to get into the nuts and bolts of Grant and see what he's doing. So she made me listen to the 10X rule on a 3-hour car ride. And after about 15 minutes, I'm like, this guy knows what he's talking about. Like, when you're an operator, you can spot an operator. When you're a leader, you can spot a leader. When you know finance, you can spot somebody that knows their numbers. There are a lot of people out there that are on the airways that are completely and entirely full of BS. They have millions of followers, and they wouldn't be able to find their way out of a dark tunnel with a flashlight. It's all BS. They're just spewing other people's stuff and sounding like an expert. When I listened to Grant, I was like, this guy knows exactly what he's talking about. So after listening to Next Rule, after Sell or Be Sold, and started following him on Instagram, started looking at what he was doing, I did a little project where I cross-referenced. I was able to get into some areas where they talked about which industries they're doing sales training in. And I cross-referenced the list of all the industries they do sales training in with my list of verticals I wanted to go to. And I realized there was about a 65% overlap. So I told Natalie, hey, let's go to GrowthCon 3 in Miami, Marlins Stadium. I said, this guy's crazy. He thinks he's going to get 35,000 people to come there on Super Bowl weekend. If he can pull that off and they run a tight operation, then I'll be interested in approaching him about maybe showing him what I do. And I went, and within the first half hour of being in Marlins Stadium, by the time that stadium filled up and those speakers came through, and I had a dear friend, someone I'm very close to and worked with, which is Dr. John Maxwell. He was speaking there. And so John and I went to dinner the night before, and I was like, John, what are you doing here? And he said, well, I want to see if this guy's crazy enough to pull this off. And he said, what are you doing here? And I said, I'm doing due diligence to see if he's crazy enough to pull this off, and the quality, because I have a business concept and prospect I was going to present to him. So John spoke the next day, and we went through the whole thing, and I called John. I said, John, this guy's a real deal. And he says, I know. He says, in fact, after I spoke, I pulled Grant Cardone aside, and he actually had me walk up to the stage after he was done talking, and he pointed to Grant and pointed to me, and Grant waved, and then they went backstage, and John Maxwell said, I told Grant Cardone that you're my guy. Anything he hears from you is the truth, and he should talk to you. And so when I met Grant, he's like, dude, heard good things about you. And I said, well, I have a value proposition that might add a couple extra billion to your net worth and mine if we were to collaborate. Would you be interested in having the conversation? And he said, sure. And so we started talking about what I do versus what he does. And we had a really strong shared vision, and he had a dynamic group of customers that he's always wanted to do what I know how to do, but there's not anybody out there that knows how to do what I do. And I don't say that egotistically, but law of the lid says you can't attract somebody into your area of expertise or control if they have a higher lid than you, because they're doing their own thing. So people that have had my experience, you have some phenomenal people out there, but they're doing their own thing. They're not going to partner and collaborate with somebody else. So I just happened to catch Grant at the right time. He happened to catch me, because what I do, Grant didn't do, but he had the audience. And what Grant does isn't exactly what I love to do, although I can, and he had a huge audience. So we decided to collaborate and become 50-50 partners and launch Cardone Ventures, where we go out to businesses or high-performing individuals, and I teach them how to scale and grow. And then for the businesses we're very excited about, we offer the opportunity for us to partner with them. And I bring my whole executive team, and we come in as partners, and we 10x the growth and the value of the business, because my objective is to build one of my mentors that doesn't know me, but I've modeled a lot of things after, is Warren Buffett. Warren made his wealth, as you know, by investing in enterprise level businesses and holding them forever, and then creating shareholders in Warren's enterprise. That's exactly how I built Audigy. It was what gave me the concept to build Audigy: shared equity, value proposition, growing other businesses using your resources, assets, and leadership. And KKR came out 3 or 4 years ago and found out, had they done what Warren Buffett did, they would have been larger than Warren Buffett. So they changed their whole private equity offering to, we buy and hold companies. We'll take KKR public, and then people can share in the overall enterprise value increase of KKR. Those are both the strategies I'm taking. Grant and I are going to go in, partner with businesses that don't know how to grow to 10 million, 100 million, a billion. I'm going to help them do that. And we're going to have an ownership piece in all those businesses. And we're going to create a fund that has billions of dollars of market value. And then I'm going to teach these business owners how to maximize the value of their businesses. Instead of selling them at 3 or 4 or 5 times EBITDA within their industry, they can pool their interest with me and do an IPO and sell them at 18, 22% or 22 times earnings, and sell 10 or 20% of their business for more than what they'd sell 100% of their business for. And that's what I'm teaching business owners to do. And we have so many examples. And the fact that I sold my business as a standalone operating company for 77 times EBITDA shows I know how to create value and sell on synergy. So that's what we're doing. That's why we're doing it. And we're unbelievably excited about it. We already have $500 million of businesses in our pipeline in less than 10 months.
That's incredible. That's wow. I feel like I just got like a PhD in entrepreneurship in that like 10 minutes right there. Something that you mentioned earlier in the podcast was that the most important thing to you was culture. I want to know what the 10X culture means to you and how it applies to all of the other business owners that are involved in the 10X business owners group.
Yeah. So, Grant is the author of the 10X rule. And what he is trying to, the point he is trying to make there is that most people, if they set their goals too low, they accomplish them, and then they're disappointed. So the whole premise is set your goals 10X bigger. If you want to create $1 million business and you think you're going to have problems getting to $1 million, create a $10 million business. Then you'll have real problems getting to 10 million. So whatever you're thinking about, put the energy and effort and the striving into 10X more, because you will accomplish your goal. If you want, people that always say, man, I just want to get to 100,000 a year. They get to 100,000 a year and they're like, I'm still broke. 100,000 is not going to make you wealthy. It's all context and contrast. And once you have those two things, you realize enough is not enough. It needs to be 10 times bigger. And by making things 10 times bigger, it forces you to think bigger and do more, create massive action towards the goal, because it's easy to get to the little goal and then back off and be comfortable. And so to me, what the 10X community and 10X culture and 10X premise is whatever you're thinking about doing, amplify it by 10 times. Because here's the thing. the bigger you think, the bigger your belief is, the more you'll achieve, because the more energy, the more effort, the more streamlined you'll put an approach into getting it. Michael Phelps didn't win all his gold medals by being complacent after he got his first one that he set a world record. So who could ever beat that? He went after his own world record, and he went after it again and again and again and again and again. And he did what Jim Collins talks about. Granular incremental improvement is how Jim Collins defines innovations in businesses, not radical changes. Tiger Woods granularly improved his game until he got injured, and then he had to radically innovate a new swing, and then he hasn't been winning as much. So you think about innovation radically doing something different versus the way Collins talks about innovation, which is granular incremental improvement on something that you already proved that works. We understand these premises. So if you 10x what you're doing and you continue to granularly improve and you get to your goal, you 10x it again, because now you have confidence. If I set my goal at 1 million and I get there, I might not have the confidence to go to 10 million. But if I'm on my way to 10 and I get to the first million, I'm going to be confident that I did 10% of my goal. So I'm going to have the confidence to go to 2 million now. Then I'm going to have the confidence to go to 3 million. I don't relax. I don't give up. And the more that this community gets around each other, the more that these stories get told. We have businesses that are absolutely conquering and crushing it right now because they're doing exactly what they're told to do. Because with me, they have a wartime consigliere. They have a wartime operator. They have a wartime leader. Like, I've been through this multiple iterations. This is not my first rodeo. I was growing in 2000, 2001, 2002. I grew 2008 through 2011. I was on the Inc. 500, Inc. 5000 list every year. I had 2 Inc. Higher Power Awards for hiring more people disproportionately than the rest of the country, because we were growing like crazy, and we were growing by growing businesses. That's my business was growing other people's businesses. So when you have somebody that this is a natural state for me. So I'm putting my book out here next week. It's the Emergency Business Response. It's exactly what to do when you encounter a crisis or emergency, because believe it or not, even though we're in a macro crisis right now as a world, which has never been encountered before, there are so many businesses every year, all the time, that are in crisis or emergency, and it's usually to flaw strategy, misaligned intentions, ego, arrogance, all this stuff that causes this demise. And Jim Collins talks about all that work, and Good to Great, Great by Choice, How the Mighty Fall, and it's happening all the time. But now it's happening in a macro event. But for someone like me and Grant, because Grant wrote the 10X rule coming out of 08, 09, 10, and he grew his enterprise to being worth $500 million in that window by preparing himself for the bounce back. And so you have 2 guys that are seasoned veterans with how to grow through adversity and crisis. And he and I are collaborating, helping thousands of businesses and high performance individuals recalibrate their thinking about the moment, so they can be in a position to dominate when this thing breaks loose, or dominate right now and use this as an opportunity to pull all the business forward. So I love these moments, because as a professional firefighter, if there's no fire, my life's pretty boring.
That's a fantastic answer. All right. And one final quick question. What's your 10X goal?
Well, for me, it's to create a $1 billion portfolio. That's my first 10X goal, is to create a $10 billion portfolio of businesses that Grant and I own in partnership or are managing on behalf of entrepreneurs, where we're sharing in the upside of those businesses and create a value of over $10 billion in intrinsic value of those enterprises. That's goal number 1. And then it's to 10X that.
Awesome. Well, Brandon, I really appreciate you coming on today. There was a lot of great information that I feel a lot of my listeners will be able to take and apply into their own lives. If they want to get involved with the 10X Business Owners Group, or they want to, find more of your content, more information about you, where can they do that?
Great question. You can go to CardoneVentures.com, and I have a live show. I had Sharon Lechter, author of 3 Feet from Gold, Rich Dad, Poor Dad series, Outwitting the Devil. She's got a new book coming out called Exiting Rich, which she and I, collaborate on, because obviously I know how to do that. And I've had many of my mentors on that show. I had Tim Grover, the trainer for Michael Jordan and all the great basketball players the week before. So if you go to CardoneVentures.com, and you can land on there, register, and you get full access. We have a lot of free online stuff. We have a lot of private groups that I coach and nurture, tons of programs depending on what you want to accomplish. The easiest way is to go there. You can find me at Brandon M. Dawson on Instagram. We're always posting stuff there. And you can go to the B. Dawson Show on iTunes, and I've got 50 or so podcasts for, anybody can listen to for free. So, you can find me lots of different ways, but the easiest way to do it is CardoneVentures.com.
Awesome. Thank you so much for coming on.
Absolutely. Thanks for having me.
Thanks for listening to another kick-ass episode of the Race Rat Podcast. Make sure to leave an awesome review and follow us on social media if you enjoyed. Now get off your phone because it's time to work.